RSI, and now we will have a weekly assessment of where the Nifty is right now and where it is supposed to be headed in the coming weeks. We'll have a look at the weekly charts and then we'll drop down to the daily charts and have a look on the daily charts as well. So as of now, you can see on the weekly chart that an important horizontal trend line or a swing line has been broken by the Nifty on good volumes. So it does suggest that the targets that we have arrived by using this trend line in the previous weeks are still intact, that we may be very well set to move to 9,600 levels as of now on this target. So this target is still intact. One more thing that tells us basically that shows that this target may be achieved is the price classical price pattern of an head and shoulder that has formed here in the Nifty, and that has broken the trend line here, the neckline, and the volumes at the break are good. So again, this is an bearish implication of the Nifty that tells us that the Nifty may be uh, in the course of moving down still, or there may be no respite for the bulls to be back in the game. One more thing, if you notice on the Nifty, is the RSI line. Why this line is important, that the members of the RSI transform group knows it, and this line has been broken, and an attempt has been made to retest the line again, and it has retested it and moved back down. So again, the momentum also, especially the RSI, tells us that the now the momentum is supporting the bears as of now, and the RSI is all set to touch the 33 levels or the 40 levels that I put more emphasis on. So again, RSI also tells us that Nifty may be heading downwards. One more thing I want to bring to your notice is we are into a major cycle, a minor cycle low that is occurring on between 28 March to 3rd April. So this is the minor cycle confluence that tells us that some type of support or some type of correction on the upside we can witness in Nifty between these dates, because this is the minor cycle support that happens. Cycles does not means when a cycle ends, it does not mean that the trend will reverse or that there will be reversal. Ending of a cycle and ending of a bear cycle and starting of a new cycle may be bearish or maybe bullish or maybe neutral also, but it's an important date you should keep in mind, and you can use it in conjunction with your price action technique or any method you follow. Basically, I use it with the classical charting techniques and the RSI technique. I don't rely on the cycles more, but yet you cannot ignore them because it is a study, and people have invested a lot of time in studying cycles, so it's an important part and integral part of technical analysis. So again, we have a minor cycle that is forming a base on 28 March to 3rd April, and a major cycle base is will be formed between 20th April and 23rd of April. So we have two cycles that will form the base. So we have to keep these dates in mind, and we may see some type of support action, or the Nifty may be crawling into sideways or neutral zone during this period, especially 28 March and 3rd April. Also, there are lots of holiday during this week. We have two trading holidays, I suppose, I think. So we may not see any major price action or neutral price action during this week. But to sum up the weekly chart is bearish, and we may be heading down towards the trend line. And one more thing, do not expect anything to happen again overnight on these charts because these are weekly charts and patterns take time on weekly charts to move to the targets. So this was the weekly chart thing, and now we'll move to the daily chart and see what the daily chart tells us. So on the daily chart, if you'll see, there is a break of an ongoing trend line that we have drawn here, and it has formed a downside gap with a doji, and you see the volumes here are quite good. So this type of pattern is generally not a continuation pattern. It may be a minor reversal pattern, not reversing the whole trend, but again we may see some action towards the upper channel again. Now there is a lot of confusion among traders, right? They face difficulty in trading a doji or how you can trade a doji star. So there is a special way to trade a doji. I'll just take a few moments to explain it, and it will also add a good method to your trading library. So how you can trade a doji or how we can trade a doji on the upside is basically we'll take the range of the doji, this candle, and we'll add it to the high of the doji, and we get a higher range here that is around 10,130 levels. So I'll just take a trend line and mark this level, and then we take this range to the and subtract it from the low, and we'll get a level here that is around 9,900 or 9,890 levels. So we have two levels here. The first is the upper range level of the doji, and the second is the lower range level of the doji. Now when to trade this doji? When the prices close above this range, you may expect some correction or some movement up to the north, that is to the up. So we may have a little bit retracement to the 20 moving average, that is in the middle Bollinger Band, or the first standard deviation band of the Bollinger Band. So generally it is expected that the Nifty may revert to the mean here, and this 20 moving average is also near this falling channel. So this makes a good resistance point for Nifty. So if Nifty gives a close above 10,130 levels, then we are supposedly moving towards these levels or this gap, that is around 10,320 or 10,330 levels. And if Nifty breaks below the low range of the doji, that is this level 9,888, then we may see more pains on Nifty, and then also our weekly targets of 10,000, of 9,700 and 9,600 levels may be active again. So whether this doji will be a reversal doji or will be a continuation doji can be ascertained with this method. This method is a very effective method. You can use it. This is nuance, after reading many literature on how to trade doji and how to trade this type of price action, I have landed upon this method, and it's works very nicely on the markets. Also, if you are in fix of how to trade a gap, or whether a gap is a true gap or whether a gap is a trap, you can visit the YouTube channel, and we have updated a full session on how to trade gap and how to measure the gaps using Fibonacci thing. So basically, to sum up now, we see that on the weekly charts, the Nifty is quite bearish. Uh, we are having one reversal pattern here, that is the head and shoulders that has broken below the neckline, and it is heading towards this trend line. The RSI line has broken and moved down. On the weekly chart, the momentum is with the bears. This cycle date we have to keep in mind, where we may see some retracement in Nifty on the upside, or Nifty may turn to the neutral zone. And on the daily chart, we have a doji, and we have seen how we can trade doji. If you want to trade Nifty, we have to take care of these two levels and see whether Nifty gives a close above these levels or not. And if it does, then we can trade accordingly. So this was the full analysis of Nifty, because Nifty is at an important point right now, and we may see a good price action coming 2 or 3 weeks from this level. So this was all about Nifty. To get more insight on this type of videos, education videos, you can visit our YouTube channel. You can search for Wave Metric, that is our YouTube channel, or you can also follow me on Twitter, and my Twitter handle is at the rate Bharat J82. And here I keep updating, real time charts and real time trades, of course, whenever I get time. So it will be also a good exposure to the markets and to technical analysis, especially using RSI. I am a student of RSI, and I like to trade with RSI. I have spent 12 years trading with RSI. I have learned RSI from Andrew Cardwell and many other people, and I have also uh, I have also researched on RSI, and I've written a paper for that. I have been awarded MFTA, and so this is what the research looks like. And if you can see, we have got an exit long signals very early in the trend, and still then we have not got any exit long short signal. Again, one thing to notice is this divergence that I have got on my indicator, that is the B extender indicator, and this divergence tells us that maybe again we may see some kind of upward correction in the Nifty, though the major trend is down. So this is what the major trend tells us. The long term indicator tells us that the major trend is down, while the short term indicator shows some divergence in the Nifty, that tells us that some kind of correction on the upside may be seen. Again, we have to confirm it with the price action, and that we have just learned how we can use the doji price action range to confirm this thing. So this is guys, this is Bharat Jhunjhunwala signing up out from ProSI, and you trade well for the coming week. Bye bye and happy trading.